Welcome back. Investors have been reminded recently that geopolitics can abruptly affect markets all around the world. Let's talk about it with Claudio Chisani, BlueShore Wealth and Portfolio Manager with BlueShore Financial. He joins us from Vancouver. Claudio, thanks for joining us. Why don't we start with the effect of geopolitical shocks on the price of crude oil? One view I've heard many times over the years is that those shocks tend to be fleeting, that they will give a temporary boost, most likely to the price of crude oil, but eventually that effect will fade before too long, and ultimately supply and demand fundamentals will take center stage again. Do you agree with that view?
Yeah, thank you for having me back on the show, Paul. With regards to oil and oil supply, it is a pretty complex story. Oil could be disrupted by supply chain restrictions and geopolitical in the Strait of Hormuz, and we can find ourselves with oil pushing $100 on one side of the coin. The flip side of it is oil is a barometer for economic activity, and what we could experience is sluggish demand all of a sudden, where oil prices could revisit the lows of a couple of months ago. So I agree with the thesis that oil could advance on geopolitical, but ultimately oil will settle in the territory where the economy drives it.
It didn't get close to $100 this time around. The Strait of Hormuz was not blocked. It made a brief run to 75 and then promptly fell back by about $10. What's that telling us about how the market viewed the shooting war between Israel and Iran?
Well, there's complexity there as well. On one hand, there's negotiations right now, so the market is trying to assess if the strait would be blocked or not. So that's one implication. But the second part is obviously what's happening with the allies and the other states that are pushing oil through various other channels. The U.S. has increased production. The Saudis have increased production as well. So it looks like the world is preparing for a shock. And on that basis, oil has kept its price where it's at right now, waiting for the next geopolitical move to be played out.
What about the war in Ukraine, which is now more than 2 years old? Is that a factor at all in oil? It has resulted in sanctions on Russian oil, among other things.
Yeah, indeed. I mean, that's a story that became front page about 2 years ago, but now the world found a way to deal with supply of oil. So on that basis, it won't impact it as much. However, if we have positive resolution out of Russia and Ukraine, and somehow oil production comes back online from those countries, there's a chance that oil supply would be increased. And I think that would certainly affect the price. Oil price could go lower, inflation could go lower. So that's a good news story in that regard. However, it's a conflict that's been around for many years, so we can't say with certainty which way it's going to go.
What about the price of gold, which has been for investors one of the most positive stories over the past couple of years? Gold prices and the shares of gold mining companies have soared over that period of time. Has the war in Ukraine, has the war in Gaza been have those been factors in the huge rally in the price of gold?
Paul, there's no doubt that geopolitical impacts gold. Any sort of instability would prop up price of gold. And at the same time, gold is a barometer for inflation, an inflation hedge from many points of view. So I think gold has been a benefactor here on many fronts. As soon as the geopolitical cloth is changing and conflict appears on many fronts, more than one, Middle East as well as Europe, and tensions as well, it will benefit gold. And gold at the same time has that incredible inflation protection. So I do believe gold is well positioned for the future here.
So where does Canada sit in all of this? We produce gold, we produce oil, we produce other natural resources as well. How is Canada exposed to, how would you characterize Canada's exposure to geopolitical events around the world?
Yeah, I mean, Canada is a resource-based and trade-dependent economy, and our focus obviously exports. So on one hand, we would have sectors and areas that would be sluggish if the geopolitical as well as trade barriers are in place. And we've seen tariffs go after Liberation Day from the average global of 3%, they escalated to 13%. That's a stumbling block for exports. So I think that's a bit of a tough market there. And that's an understatement. The auto sector, construction sector, sector, and so on and so forth. But there are areas in the Canadian economy, point in case, the oil producer as well as the gold producers, that could be benefactors as to what's happening around the world. There's implications to the American dollar as well, vis-a-vis Canadian dollar for exports, something to be considered at the same time. So we have to be optimistic on one hand, but on the other hand, we have to be cognizant of the challenges ahead due to the trade restrictions.